And we're live. Hi, Ian. Hi, everybody. We're back. We're back with Ian Fong. He's the Director of Marketing and Partnerships at Propine, and we're very happy to have Propine partnered with us for our hackathon as well as our summit, Decentral Hacks on the Road to Metamorphosis. Uh, and Propine is, as I understand, is a digital securities services provider, and much more. I'm sure Ian will fill you in. He has a presentation for you. We're speaking on digital securities and its impacts and challenges. Ian, the floor is yours. Take it away.
Thank you, Abhijit, and welcome everyone. I will share my screen now. Okay, I will start now. Hi, I'm Ian Fong, Director of Marketing and Partnerships of Propine. We are a Singapore regulated and licensed tokenization and custody service provider for digital assets. At Propine, we are inspired by the moonshot ambition to reshape financial services. First, we are reinventing capital markets to make it more accessible and efficient through our digital security solution using blockchain technology. Secondly, we simplify institutional cryptocurrency-related transactions, operational processes, management and storage of digital assets while ensuring the security and privacy. And finally, we solve the digital asset security issues for institutional investors to meet not just their near-term liquidity needs, but also the regulatory requirements for cryptocurrencies. Propine is fully regulated and is the first licensed custodian for digital assets in the Monetary Authority of Singapore. The Capital Market Services license issued is the highest type of license for asset custody. And this event has been a watershed moment, not just for Propine, but has served to move an entire industry forward. It has enabled several hesitant but eager institutions waiting on the sidelines to be able to participate in digital assets. Propine provides the highest levels of certified security and compliant digital asset custody solution for safeguarding multiple asset classes, including digital securities, cryptocurrencies, stablecoins, NFTs, and fiat on a single integrated custody platform. Our state-of-the-art regulated and secure platform, ProTech, offers a complete suite of institutional digital asset services, including digital security solutions and crypto management solutions. Through our anti-money laundering and know your customer compliance service, we ensure that you stay compliant with regulations, manage and mitigate compliance risks, while allowing customers to be onboarded safely and efficiently each time. Our robust solution quickly identifies risks before they become threats through verification of any senders and beneficiaries' identities to ensure no money laundering and terrorist financing slips through the process. And working in conjunction with our digital securities and crypto management solutions, the fiat custody and escrow services will ensure your money are kept safe with regulated banks globally, while improving the convenience of interaction with your bank without having to leave our platform. Now, despite the pandemic causing the economic downturn in recent years, the intense volatility of cryptocurrency has been observed not just with Bitcoin, but also other coins. Blockchain is the underlying technology that many cryptocurrencies operate on, but its unique way of securely recording and transferring information has broader applications outside of cryptocurrency. The rise of initial coin offerings means that thousands of different cryptocurrencies are out there, with ICO-generated coins commonly referred to as tokens. And the rise of one very special kind of token called a security token or digital securities, which provides one of the most encouraging cases for blockchain technology yet. There has been considerable uncertainty in the past as to how security tokens should be considered within the law. Today, there are clearer signs that traditional market infrastructure is adapting to token economy. With the burgeoning industry over the last few years, key infrastructure and markets are currently in place, and supporters are certain that digital assets are primed to take off very soon as the industry takes shape to create a lasting legacy. Large institutions like Tesla, DBS, HSBC, World Bank, NASDAQ, and many more are embracing the new reality that capital markets are in a steady march to be fully tokenized. Both traditional players and fintechs have since realized that it is no longer a question whether digital securities will become mainstream or not, but how fast it will be adopted as the way of the future. While the reality has yet to catch up with the hype's full potential, with the recent increase of digital securities offering by traditional players, this may signal the onset of an industry-wide butterfly effect for its global adoption. Now, let's find out what exactly are the impacts of digital securities on the current financial system. The daily value of US Treasury securities that were not delivered to fulfill a trade contract, as recorded by DTCC, exceeds $67 billion for its 52-week period. Failed trades occur when either sellers fail to deliver or buyers fail to receive securities in time to settle a trade. Such high failures not only create a massive cost, but in stress periods can cause instability in the plumbing of the financial system. For any financial instruments, the process starts right from the time a trade is being executed to clearing and settlement of the trade. Clearing and settlement services are critical for capital markets, especially in securities operation, but that entire process is extremely cumbersome, exceptionally manual, and very expensive. Now, digital securities, also known as a security token, is a digital representation of an asset where investment contract and ownerships are recorded, verified in a blockchain network using distributed ledger technology. The utilization of a shared distributed ledger, geographically spread across multiple sites or institutions, alleviates the need to perform reconciliations of different databases under the current system, which is time-consuming and can get very complicated. The manual intervention required in these reconciliations creates large costs and expensive errors. Through digital securities, clearing and settlement risks will be reduced as the process can be executed within T0 time frame. This in turn increases the capital efficiency for market participants, where the amount of capital that need to be set aside will be significantly reduced while removing the credit risk that they take on during trading. Second, digital securities enables fractional ownership of an asset which can be traded on global digital securities marketplaces and exchanges. With an offering that is global, this allows efficient access to different kinds of investors from multiple countries and thereby increases the available capital pool. For issuers, it means a reduction in cost to go to market and accessing cross-border pools of capital, as well as the ability to reach out to a broader investor base. Now, in developing countries, issuers can potentially find other avenues of capital through digital securities rather than just relying on traditional bank loan sources. As for the investors, it means that the democratization of a wide range of asset classes. The increased liquidity reduces the risk for investors, which further facilitates capital raising, while the diverse pool of investors leads to a more vibrant and resilient capital market. One of the biggest benefits of digital securities is its ability to be customized for a very specific transaction and unlocking value in that transaction for both issuers and investors in a cost-effective way. Therefore, it is no longer necessary just to be confined in issuing a simple debt or convertible note or plain vanilla equity. With an increase in efficiency and decrease in the cost of servicing those assets, digital securities can potentially create bespoke structured product that can unlock the best value for both sides on the table. It can be customized to align directly the risk-return profile of the investors with their investment views. To level the playing field and create equal investment opportunity for all, it is necessary to open up private markets to non-accredited investors or investors with much smaller ticket sizes. Through digital securities, this additional pool of investors can now be accessed by small and medium enterprises, and smaller deal sizes can thereby be executed. To invest in many alternative investment classes such as hedge funds, venture capital, or private equity, an individual must qualify as an accredited investor and thereby alienating the group of smaller and non-accredited investors. For that reason, the latter group is not able to get access to professional advice from fund managers. There are no data available for their due diligence considerations, assessing portfolio risks, and enjoy the benefits of portfolio investment. In the absence of digital securities, small and non-accredited investors are allowed to access to private markets through crowdfunding platforms. However, investing through crowdfunding platforms is uncharted territory for non-accredited investors. And such investment increases concentration risk, have no diversification benefits, and the odds are stacked against them from actual making money. The amount of information available to retail investors on crowdfunding platform is of much lower quality compared to what the VCs or professional investors are able to glean from the companies that they are investing in. The end result is that there will be an information asymmetry which leads to suboptimal decision making and subpar investment opportunities for smaller and non-accredited investors that creates an uneven playing field. Digital securities, on the other hand, will help to enable a level playing field where smaller investors will get the opportunity to access open private markets and thereby creating market efficiency. Now, what are the challenges to be addressed? So there are a few key reasons why industry is still a couple of years away from mass adoption. There are different aspects that need to be established before digital securities can really take off. They are global regulations and tax implications clarity, absence of compliant infrastructure, homogeneity in the global regulatory space, and insurance that remains a barrier. Let's dive deeper into these challenges. Firstly, global regulations need to be very clear and homogeneous. Market participants need clearer guidance on digital securities. While regulatory oversight is important in creating a safe digital asset space, regulatory clarity allows this nascent market to reach its full potential. According to the Security Token Group's article on defining security tokens, list of all countries with legal definitions of digital securities and security tokens, over 15 countries globally, including Singapore, have already defined digital securities under their statutes. And taking the lead from pioneering countries, more countries are needed to come forward to clarify digital securities globally. With regulatory clarity, the tax implications will also be clearly defined, which is an important aspect for institutions to play in the market. Finally, the market is going to go through a massive rapid adoption as more scalable, dependable, and compliant infrastructure, which is offered by reliable, regulated participants, comes together. Now, in the past year, the number of firms, startups, as well as existing traditional institutions that are interested in the space has increased significantly and progress with obtaining the right type of licenses from regulators. The legitimacy within the space is further concretized with more digital securities being issued. In addition, the recent surge of the global crypto adoption is causing a massive halo effect on digital securities. The key question that remains to be answered is whether the global digital securities regulation can we eventually play from the same rulebook. From a technological perspective, with more players entering the market, the architecture used by the industry is becoming more standardized. However, one of the biggest concerns is that standardization does not always ring true for regulations among the few governments that have already defined digital securities under their statutes. The ability in achieving a near homogeneous digital securities global regulation will simplify the process of cross-border digital securities facilitation. There will be less disparity in how each regulator profiles and deals with digital securities, as well as the associated laws around that. Insurance remains one of the biggest barriers to digital securities market adoption. The current insurance industry is not at the curve to meet the demand of the digital assets industry. Just like any other digital assets, digital securities presents unique challenges for insurers. Typically, insurance premiums are based on historical data, but such data is absent due to its nascent state. As such, insurance covering the risks is likely to remain expensive and in short supply. While the current digital securities business, which mostly involves startups and exchanges, may not be big enough to provide substantial revenues for the industry, the insurance market needs to start softening as they take notice and better understand the digital securities market and requirements. Failing which, even as digital securities becomes more widely accepted, lack of insurance capacity could stall its upward trajectory. In conclusion, digital securities is an absolute game changer for the capital market. Through distributed ledger technology, it brings in a new era of capital raising and investment with both the efficiency of cryptocurrencies as well as smart digital representation of ownership of a tradable financial asset. With the burgeoning industry over the last few years, key infrastructure and markets are currently in place, and supporters are certain that digital securities are primed to take off very soon as the industry takes shape to create a lasting legacy. So, if you enjoy defining the future and want to know more about digital securities, reach out to me at the coordinates mentioned here. Thank you very much for your attendance.
Thank you, Ian. That was a great presentation and quite informative, I might add. We do have a few questions if you can take them. Yeah,
Yeah, give me a second.
sure.
Let me
I'll
just
just
share my, yeah, that's it.
also message on the chat itself your email, ianfong@propine.com, is it?
Yes, Ian.Fong,
Ian.fong@propine.com.
yeah, at propine.com.
Propine.com. All right. I mentioned that. All right, we have a couple of questions from the chat and a few from our team as well. Danish asks, what is the core advantage of these tokenizations in the digital market?
Well, as I mentioned just now, I think tokenization actually allows fractionalization of assets. I think that is one of a very key advantage. I mean, in the olden days where you want to sort of like, invest, especially in the private market that we're talking about, it is only open to, the VCs, always have the best advantage. However, because of tokenization, this allows actually that the entire kind of like investment amount is much affordable, especially to the non-accredited investors. So, and then they, as well as with the new exchanges and the players that have secondary market trading, that will allow that more people to actually get access to that asset that or that digital securities that has been tokenized. I think that is one major, a very important factor that how asset tokenization has caused such a sort of furor, or that will be the future of the financial markets.
Right. Uh, Fair enough. I hope that answers your question, Danish. If you have any follow-up questions, we're still taking questions. Nikhil asks if the US SEC approves the crypto ETF, what effects will it have on the crypto market?
Sorry, I can't hear you.
If the
USD?
US Securities Exchange approves crypto ETF, what effects might it have on the crypto market?
I think, okay, that is a very, very good question because, you know, uh, currently, as far as I know, they have still not have approved the ETF. I mean, the Canadians have done so. I think Labuan as well in Malaysia. Singapore is coming very soon. But this is the kind that I think the US, while it is very sort of like in the forefront in terms of technology and trying very much to sort of be inclusive, I think the SEC now it's just being extra careful, and especially with the volatility of the cryptocurrency prices. I realize that, I mean, in my personal opinion, it is just a matter of time. And
Mhm.
this will actually happen that they will allow the license for ETF of Bitcoin or cryptocurrency. And may I ask the question again? Am I answering the question or, sorry?
The question was if the US SEC, if the US SEC approves crypto ETF, what effects will it have on the crypto market?
Okay. So it has not, if approved yet,
Approved.
but
Yeah,
it
yeah. If
has.
it does.
I feel that for ETFs, although that it has a greater, but retail players are already playing it. I think that it's very much so for institutional investors who are sitting on the sidelines and they are still not sure whether should they invest on cryptocurrency. So it's actually a very good sort of like alternatives because you can actually invest in such cryptocurrency ETFs, but at the same time you don't have to worry about custody. You don't have to worry about safety and security because I'm sure all of you have heard a lot of hacks and on security. Sorry, on the cryptocurrency exchanges, right? So therefore, I feel that it will be a very big deal for institutional investors, especially. Yeah.
Okay, that's great. Anupam asks, when can we expect regulation for security tokens, and if there are any positive signs coming from the regulators? And even I had sort of question the same direction when you mentioned tax regulations coming in, and when the government introduces them. Whereas governments introduces them, only then people will know the defined tax regulations that digital securities might have. So in that case, where do we stand on that, and how far away are we, from regulation of these security tokens, especially in countries like, say, India?
Um, okay. I think that it is actually, I mean, my personal opinion again, I feel
Yeah.
that, it is at the beginning of the J curve. We are at the beginning of J curve. If you realize those, the countries like Singapore, for example, that, MAS, is being very progressive. It has already given us the license. Okay, so therefore they are monitoring. I mean, digital securities are based on the existing rules of securities, actually. Okay, so
Okay.
but we work in tandem and in sort of like a relation with our regulators, which is MAS, and we share our ideas and how we want or how we actually manage this custody of digital securities. And the reason why I bring custody is because that is one of the main issues that why that we need regulation. Because if you can see that there's a lot of cryptocurrency exchanges that are being hacked, and as well as what we are worried as well is they are not, people just lump cryptocurrency with digital securities. I think a lot of people still do that. It is like, oh, digital securities. I have friends who say that, oh, you're working the oh, it's a scam, it's a sham, it's like it's true. Look, I think I've been giving so many talks and people still say that. But digital securities, it is actually a regulated
Yeah.
smart securities. And a lot of people, uh, I'm afraid to say that. Unless you are in the financial, or even if you are, unless in the fintech, and even if you're fintech, unless you are in, the capital markets, most of you probably would have heard of digital securities. So now, when it comes to regulations, I think that a lot of countries are trying to have this wait and see attitude. You have a few countries, as I mentioned. Singapore being one of the more progressive one, and and of course in UK as well, that you see the regulators, FCAs and all that, they are actually regulating digital securities based on the security standards. And for India specifically, I feel that it is such a huge country, and sometimes it takes a long time to convince a lot of players out there that you know Singapore is small, so it's easy. Like, okay, we implement this. And in fact, when we were the first being regulated, we are in the sandbox for almost a year. So I would say that it's definitely coming. And I feel that this is the best way to raise funds, the best way to actually, because it is so cost efficient. As I mentioned, it's T plus zero. So yeah,
Right.
so that's my answer to that.
Oh, perfect. Oh, that's great. Um, Another question from Anupam. He asks if you think Kathy Wood's ETF stands a chance of approval by the SEC.
If the ETF would stand a
If,
chance,
of approval
sorry,
by the SEC. Kathy Wood's ETF in particular.
Cathy Woods ETF, is it?
Yeah.
I don't have. That's a very specific question. I wish I have a crystal ball that I can gaze into it. So I'm afraid I can't answer that, and I don't work for SEC. But I
Fair
am
enough.
very sure that if they, have put on a very, because I don't know the details of what exactly, because in US SEC, you have this huge complete form that you spend lots of time to actually submit, your ETF. So because I don't have privy to that, so I can't answer that question. I'm sorry to say, but I'm
All right.
very sure that if it has, uh, 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 you know, uh, uh, has met all the regulatory requirements of SEC, I'm sure that it will get its license.
Okay. I think that's all the questions from the chat. I'll ask you just one last question before I let you go. What has your crypto journey been? How did it begin? And what are and we can follow that up with what are Propine's future plans?
Okay. Okay, I'll start with myself first. I actually chanced upon this industry. It's because that, I used to, you know, I used to do all the marketing, or I was the marketing lead for the Singapore FinTech Festival. Okay.
Okay.
And it is one of the world's largest fintech festival in the world. And what happened was that because I was actually running the event, I've been doing the marketing for the event and leading it, and I was working with MAS, which is our regulatory department of Singapore, and I didn't even realize that in this kind of fintech, how many people can we expect in the ecosystem? And guess what? After 4 years, I've been doing that, and it's over 60,000 for this event, and that was when I realized that what, I may know the industry in a very sort of like surface kind of value, because it's very generic, because I was just handling the event. So I know insurtech, I know cryptocurrency, I know bits, pieces, and here and that. I've interviewed people and all that, but I would like to actually deep dive into something like, the financial market, so that, I'll be able to sort of like appreciate it better. So that's where,
Okay.
I met up with Propine, and that's where I got the job. And I'm glad to be doing this because, we are the first of many, like, being regulated and all that. And as for Propine, I think we have the kind of first mover advantage, being the first company firm to
Regulator.
be regulated. That's one, and also that Singapore being such a progressive, we have such a progressive regulator, and our name is known as the the fintech city of the world and all that. So we felt that there are a lot of opportunities. And what we are looking is more than digital securities, as I mentioned. We want, or we already have an integrated platform. And this is something that is so special because a lot of people, like, if you work with a lot of other digital securities player, when you sort of go into their ecosystem, you are sort of restricted within, you have to use their blockchain, for example, or their kind of ecosystem. Well, because we are independent. So what our customer is, we give them the freedom of choice. You can choose your own tokenization partner if you would like. You can choose your own secondary trading partner. What we provide is that because our system allows such a freedom of choice that that allows this kind of uh, 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 um, different partners to be able to work together. I think that is unique and that is special. And yeah, so that is, and I strongly believe that Propine is going to watch out for us because and for those who are interested in digital security or even cryptocurrencies, because we are not just, when I say the company is not just focused on digital securities but on digital assets basically. So yeah,
Yeah.
thank you very
Well,
much, Ajay, for having me.
thank you, Ian. I must say that was a great presentation, very eloquent presentation, I might add. And yeah, we'll certainly keep an eye out for Propine in the future. That will
Thank
do.
you.
Thank
Thank
you,
you, Ajay.
everybody, for joining in for your questions. And our next session begins at 12:30, where we're having a presentation by Kyber Networks developer, and it begins at 12:30. You can, till then, you can go to the networking option, speak with people who have joined in for the event. You can download the agenda for this event from the stage below or from the reception, and we'll see you at 12:30. Thank you.